Hello, everyone. Welcome back to the channel. This is Fair Value Finder, and today we are taking a look at Graco Inc., ticker GGG, a stock that I had never heard of before. I heard about it the other day, so I decided to look into the financials, and they are not half bad. So we're going to take a look at this one. We can see that they've been on a nice uptrend since 2020, and they're kind of at a top right now. They've bounced off this once in the past. Around the 78.50 level is when they start to hit some resistance. So we'll see how it goes this time, especially with them coming out with their earnings recently and this huge uptick that they saw following that. Let's get into the financials and see what we're looking at there. And here we have the financials for the company as of the end of 2022. So we see a few red flags. Cost of goods is growing at a faster rate than the revenue. The total expense are growing, not quite at the same pace as the revenue is, but definitely faster than we'd like to see. The gross profit has been on a slight decline, although it is a decent number. And the share count increased just slightly over time. It looks like up until 2021, they were issuing shares, and they're back on the way down as of 2022. So that could pose a good point to get into it when they're starting their buybacks. Top line revenue is right in line with what we'd like to see, somewhere between 5 and 10. It is on that higher range. The gross profit growing at 7.1%, net income 10.24, EBIT 11.17. Those are all great financial numbers that we're looking at here. And those give us a gross profit around 50%. It has declined a bit since 2019. But they're just shy of 50 and potentially could get back above it here soon. Net percent, we see growth of about 1% year over year. That comes in around 20. It's moved from just shy of 21 to nearly 21.5, which is something that I really like to see. And then earnings, they're consistent with their earnings, not massive growth, but fair growth. So they're currently trading at a 28.28 PE based on their history. Looks like the market likes a 27.31. So they're a little high on that. Something around 74.5 would be more in line with historical numbers. And analysts are expecting them to come in at $3.04 a share for this year's earnings, which would put it at $83 moving forward. Assets, we see some strong assets, very, very small liabilities here. This is what's really drawing me to this stock, is their balance sheet is in really good shape. Their assets are growing very fast. Their liabilities are shrinking, and they're already slow. And the book value is moving up over 34.5% year over year. But even so, we end up with a book value per share that's very low, and we end up with only a $24 value for that portion of the business. So as they buy back shares, this will improve. If they continue on the trajectory that they have, this will improve. And with both of those, we're looking at 33. That's a 50% increase in the value of that portion of their business, that balance sheet portion, over 1 year. So that's something that we really like to see. It might be low, but the jump in this is great. Free cash flow, they're not the best for free cash flow. Pretty low compared to what we've been looking at. They've been declining year over year. This should actually be a red flag. And that would only value the stock around $21 moving forward. If they continue this decline, $17, nearly $18. As we mentioned, share count is up from 2019, down from 2021. We'd like to see them continue buying back those shares. Shareholders' equity is climbing quickly, up nearly 22% year over year, moving from 1 to almost 1.9. So it's almost doubled since 2019, and that's something that we really like to see. The dividend, they pay a 1.22% dividend, or that's their yield. That's 94 cents a year. Historically, they've been around 1.23, so that's right in line with how they historically perform. And their industry typically is around 2.3. They've been growing this very quickly, 13.67% year over year. And that's something that we'd like to see continue. For the ROE, we see them towards the lower end of what we like to see, above 20%, about 25% as of this last year. Like to see it back to that 2019 level of 33.55, but we'll see if they're able to bring this up or if this trend will continue. And then as for the Lynch formula, it comes in at about a 0.4. So that says that it is overvalued. It has a pretty high PE ratio for the growth that is expected or that it has experienced in the past. And they pay out a low dividend. So if they were able to raise this dividend, that would help improve this metric. But I feel like I'm going to rate it a hold based on all of this that I'm seeing here, which means that I might need to initiate a position myself and just average in if this stock goes down or if these numbers improve, because I really like to see this balance sheet is incredible. Earnings per share growth is good, but most of the financial numbers are looking really good. They need to work on those expenses a little bit, and we'll see how that goes. But those expenses will help with the cash flow, and if they buy back some shares, I think that this is definitely something that I'd like to hold myself. Now we have the earnings. So these earnings came out April 26th, so I'm a little late with it. Like I said, this is just something that a stock that I caught wind of. I just heard the ticker, and I decided to look into it because that's what I do. And I kind of liked what I saw. So we're going to dive through this and see if they're working on those trends that we want changed or if they're able to continue those that we liked. Net sales up 7%. That is what we like to see. Above that 5, not quite that 9 that they've historically come in at, but they have the whole rest of the year to finish that off. Operating earnings up 22%. Net earnings up 28%. Diluted earnings per share up 30%. So that is much better growth for the PE that is currently trading at. So I see why this stock jumped up off of these. Gross profit margin rate was 2% higher than first quarter of last year, mainly due to the impact of price changes and favorable product and channel mix. Operating expenses increased 2%, but decreased as a percentage of sales by 1 percentage point. So it looks like they saw a lot of volume and price towards the positive. Pacific Asia is really the only place that we see it down, and that could just be because of the Chinese lockdowns. So this might bounce back and could have been even better if it weren't for that. Currency, we know that there's been a lot going on in the currency markets, so this is not a huge surprise if they're using different denominations. So in total, growth. Americas saw good growth. Asia Pacific saw a pretty steep decline, but I'm sure they'll bounce back from that. So here's the EBIT. That is some great growth that we see here. That's about 30. So 20% growth or so. Earnings per share came in at 75 cents per share. So they're off to a very good start to that $3.04 that's expected of them. And they will likely come in above that. So we'll see some great growth this year. The average number of shares, we see they have been buying them back. There is a decrease there. So that is one of the trends that we wanted to see. So this confirms what I said earlier. It's I had it rated as a hold for the financial numbers of last year, and that I would probably initiate a position. And I feel like this is going to be maybe a weak buy. I'd like to see the price a little bit lower. I think that it's basically at fair value. And if these earnings continue the way that these earnings did, I think that this stock is looking pretty good, and we could definitely break above that $80 level for the fair value of the stock. I'd like to see a stronger dividend. But they've been growing it very fast, and their cash flows are a little tight. little low, so they don't really need to rush that. If they can help use that cash for investment or whatever else they might need, then that would be the preferred route. I want to thank you guys for watching this video. Please like, comment, subscribe, let me know what you want to see, and I will catch you next time.